Let's take a look at some charts on Monero for this week's article on Brave New Coin. So Monero is a privacy coin, and it is in the company of other privacy coins. There are a few of them: Dash, Zcash, Decred, Pivx, and Grin. Now each of those coins will say that their privacy options are the best and the other coins are terrible. So it's a bit tribal. Very staunch, dug-in community members here. From my perspective, things like Monero and Grin, which have default privacy, cannot be shut off. Users can't accidentally not use it. It is required. It is just part of the chain. To me, that's the best privacy it has. I believe it would have the biggest pool of transactions. In general, most of these privacy coins work by mixing addresses together and preventing anyone at the other end of the transaction from using the blockchain to look back and say, oh, this transaction came from here, because you just can't do that the way the protocol works under the hood. So if we compare everything to various on-chain metrics and GitHub stuff, Monero's the obvious leader in the market cap here, leader in the fees as well. And I think part of this is transaction related. Part of this is how the chain works, because privacy is default. So if you look at Dash, they have a lot of transactions, but privacy isn't default. So not all these transactions are private transactions. And from what I can tell, XMR has the most private transactions. That includes Zcash, because from what I can tell, the shielded addresses or the shielded transactions, there aren't very many of them. So this would explain why the fees are so high, at least partially. Clearly there's some scaling that probably could be done, or some innovation for Monero to bring those fees down. But in general, it makes sense that market cap is the highest, transactions are the highest, fees are the highest. Okay. Active addresses are unknown, so we're not really sure. So is daily transaction volume. My guess is XMR would have the most active addresses, but less than Dash here, just because Dash is not 100% privacy oriented. And GitHub commits at the top of the pack, or near the top of the pack rather. So Monero's nothing to snuff at amongst the company of others. And if we look at Monero's hash rate and difficulty, so Monero changed their protocol completely as far as the algorithm is concerned, the consensus algorithm. They changed it to RandomX in November 2019. So you can't really compare this hash rate to the previous hash rate, even though it looks like this is an all-time high. It's just completely different. So right now it's at an all-time high since it changed over to RandomX, which is good. You want to see more users. You want to see people mining it. If people are mining it, it generally means that those are believers in the network's future. This could also represent botnet or malware mining. Certainly Monero's had issues with that because the privacy is so good. So it's hard to know what to read on this other than over the past 6 months, hash rate's gone up, which should be bullish. What I don't like from a distribution centralization perspective is these mining pools have, 3 of them have like 70%, 77% of the total hash rate. This really needs to be spread out a lot more for centralization purposes. I expect and hope over time this will happen. Ideally, in a perfect world, everybody's just a small pool, but how this usually works is there's some sort of incentive to use one of these pools over the others, and eventually there's a congregation of users to a specific pool. If we compare Bitcoin's supply, total supply, to Monero's total supply, and Bitcoin's inflation to Monero's inflation, they're pretty similar. The inflation is different in that Monero's is continuous, it's not stepwise, so it doesn't hold until halving and then decline. It just continually decreases. And it's getting to the point where the supply is reached, or near reached. It's 18.5 million or whatever it is total. And at that point, the issuance will just stay the same and it won't continue to decrease. So it'll be really interesting to see the network when that happens, because of security issues and disinflationary properties being gone, that sort of thing. Much different than Bitcoin in that respect, because Bitcoin has a finite total supply, whereas Monero will just continue in perpetuity. So there's obvious advantages and disadvantages to that, but I think the big one is just continuing to secure hash rate on the network, because if if mining isn't profitable, then the hash rate just drops off, and then if hash rate drops off, the network becomes insecure, and especially in Monero's case, if the network isn't secure, then the privacy stuff is pointless because anybody can just chain analyze the small set of users and reveal all the transactions. If we look at transactions per day and mining difficulty in the fill here, in general, difficulty has risen before peaks in transactions per day. And we kind of saw that again here, showing how it echoes here. Again, bullish to see transactions rising, not a surprise if hash rate is rising. So in a vacuum, that's what you want to see. Just again to compare all the privacy coins together with average transaction fees in USD. You can see Monero is second behind Pivx. I think Pivx has serious scaling issues, especially if no one's using it relatively and fees keep rising. That's a red flag, definitely. But again, if you also look at the capabilities of Monero versus all these other privacy coins, you say, okay, is it justified? It's a user-by-user use case basis, but to me, I think it is justified that the fees are as high as they are compared to everyone else. Now, if we look at technicals, we have Bitfinex long-short ratio, VPVR, yearly pivots, 50, 200, EMAs, volume, and RSI. Nothing too exciting on RSI. It's never good to see this concave, convex, whatever it is, this sloping of RSI, sloping of price. You don't want to see that. We're above the EMAs right now, just barely. EMAs are just barely bullish. So it's definitely sideways hanging by a thread here. It really needs to get above this yearly pivot. Otherwise, it's going to retest this VPVR zone. So I'd expect it to break out from 75 to 85 if it's bullish, which is just slightly on a sliver leaning bullish. And then 100 would be the next level. Otherwise, it's just going to consolidate here indefinitely. I don't really see any strong bullish momentum at the moment. Oh, and long shorts are just kind of flat ranging. Nothing too exciting there. We're above the cloud. Cloud is bullish. Everything is bullish here, but just barely. So if this drops any lower, it definitely starts to flip into bearish territory. Not something you want to see if you expect bullish continuation. And then lastly, if we look at XMR BTC, this actually looks like it's in a lot of trouble in that it's got this multi-shouldered, multi-headed head and shoulders thing where it just keeps bouncing on this level horizontal here. And at this point, the expectation is that eventually this support will break. So as it sits now, it's bearish neutral. I mean, it's below the 200, below the cloud, but it's definitely in this range. So this is really the important indicator to watch as far as expectations for price. So if it's unable to break the 200 in the cloud, it's likely to break this horizontal and likely to want to retest these highs from 2015, 2016. So as it stands, the USD pair is slightly bullish and the BTC pair looks bearish and in trouble for a pretty decently sized drop, probably over the next 6 months, if some bullish momentum doesn't show up pretty soon.